Kevin, I got to ask about trade, because in addition to the worldwide slowdown for some of their own reasons, you look at what's happening in France and Germany, they've got to answer to their own policies. But there are very strong indications that the tariffs and other trade policies initiated here are slowing down world growth, particularly when it comes to supply chains. These supply chains around the world have taken sometimes decades to arrange, and some of them are now being broken. That comes at great cost to corporations and companies around the world. Isn't that at least partially responsible for the global slowdown?
I think that if you look at, let's take the case of China. You know, in the economic report of the president last year, we documented, and I'm sure you guys on the show have talked a lot about the fact that China is actually stealing a lot of our intellectual property and they're forcing technology.
Understood. Okay. But this is beyond that. Finish, this is in terms of the supply chains.
But let me just finish. And so President Trump has taken a strong stand against China, and it's certainly been disruptive for Chinese markets and even investments in China, because people are worried about U.S. tariffs on their production over there that they might have planned to ship back here. But the end game is trade reform. The end game is that China lowers its tariffs on our products and lowers its barriers and allows our firms to have access to their markets without transferring their intellectual property to them. And that's a big plus for markets if we accomplish it. And you'd have to admit that without the tariff move that the president made, then there'd be zero chance of getting China to reform. But now the Chinese economy is slowing, Chinese markets are down an enormous amount, and the Chinese are at the table, and we're very, very hopeful. You know, we're hearing good things about the negotiations. We're very, very hopeful that we'll make a lot of progress that'll be good, really good for their economy and good for our economy too.
Hey, Kevin, I'm all supportive of us making sure we protect our intellectual property. I mean, as you know, I was a supporter of TPP. I think it should be brought back on the table. But no one can tell me China slowing or China markets down is good for the global economy. So I'm a little confused by that, because also our market's down. Let me just finish. Our market's down 12% since this all began. So, and we're down for the year. So it hasn't been good for us as well. I'd also like to hear your views of a strong dollar. You know, considering we're very low on exports, manufacturing slowing, that can't be too good for us as well. And I know the president tweeted about success of the strong dollar, so I'd love to hear your views on that.
Right. Well, really what I'm saying is that if you go back to our estimate from last year, let's just say, I'll pick a number, there was a range, but pick a number. China, if they're stealing $500 billion a year in IP from the U.S., then that's a heck of a lot of benefit we can have, right, from getting a new deal with China. And so for sure that there's been turmoil in China, especially because of our desire to change the game. And that turmoil has been bad for their markets, but I've shown them that President Trump is really, really serious. And now I think if we move towards the better world where their markets are open to us and their tariffs are zero and we reciprocate, then that'll be good for everybody. And that's the sense in which I think I was making the point that we for sure there's some disruption now, but the old status quo was unacceptable really to American voters and to the American president.
Kevin, let's say the U.S. economy does well next year, the trade thing gets resolved and everyone's happy. What do you do about the Federal Reserve still holding to that obsolete belief that prosperity causes inflation?
Oh, yeah.
The old Phillips curve that, that prosperity is bad for us. People get heated up if they make too much money. How do you get the Fed to realize that's an unreal world they live in?
Well, the Fed, again, I want to respect their independence, but let's just talk about economists, right? I mean, so the problem is that if you've too much committed your intellect to Keynesianism, then you think that the ebb and flow of the economy comes from the demand side, and then the Phillips curve actually describes inflation pretty well. But what's happened this year, and this goes back to something that Steve Forbes has been talking about for decades, is we've had a big supply side tax cut. And that increase in supply has put downward pressure on prices. And so we've got a boom without inflation. That kind of thing can happen from the supply side, but not the demand side.
But do you think the Federal Reserve is going to, can you re-educate them? I mean, seven Nobel Prize-winning economists have said this Phillips curve, which posits there's a trade-off between inflation and unemployment, is nonsense. How do you get them off of that?
It's sometimes true. It's sometimes true. Again, like if we had just spent $1 trillion on cash for clunkers or something, then we'd have maybe more economic growth in the short run and inflation. So it's possible to be in a Phillips curve world, but we're not in that world right now.
Kevin, I feel for you. This is Morgan. When I was Treasury attaché to Saudi Arabia and the rial is pegged to the dollar, they used to yell at me about everything that the Fed did, and I always told them, for the Treasury, totally different. I actually want to pick your brain on something totally different on cryptocurrencies, because the administration China has not been, vocal about it. CFTC Chairman Chris Giancarlo has always had sort of a positive opinion. We know that they've fluctuated wildly this year. Does the administration have a position on cryptos and their development?
I mean, there's definitely been, policy meetings and discussions on cryptocurrencies, and people are watching them closely. I know people at Treasury are keeping a close eye on things, but, right at this moment, we don't have a position on cryptocurrencies to announce.
Okay.
Okay.
And Kevin,
we're following it closely, but yeah.
What's the White House's opinion on the market volatility? And I know that Trump is largely blaming the Fed, and the Fed is largely blaming Trump and saying that trade is creating chaos. And knowing that the jobs and unemployment numbers are lagging indicators and the liquidity in the system is a leading indicator, what's Trump's viewpoint on the recent volatility, and particularly if we take out these technical lows that we're sitting on here?
Well, again, the president speaks for himself, and it's something that you guys see practically every day. He talks about these things. I think that in the end, the day-to-day movements are really hard for economists to predict. But that in the end, what happens is that if you've got economic growth and earnings growth and then dividend growth, then you have very strong equity markets. And the economic growth in the U.S. is very, very strong, but in the rest of the world, it's not. And I think that if you look at the change in the earnings outlook that comes from slower growth in Europe and slower growth in China and smooth through the ups and downs, then you would expect a market that was about flat for this year.